Good day and good trading. This video is called the script. Now before I proceed too far, what is a script? A script is a set of written instructions executed by a computer program or a text-based document outlining actions for a performance. Depending on the context, the term generally refers to one of two things. In programming, a script is a file containing a series of commands or code written in a scripting language. For example, your Python, JavaScript, so on and so forth. Whereas in entertainment, a script is the written text for a play, movie, television show, or broadcast, detailing the dialogue, stage directions, and character actions. Now, what about trading? For me, I believe a script in trading is the already programmed set of rules that price must align before every expansion. Now, what does that mean? That means that a script in the trading environment is the rules that have already been set out by the person that programmed the market. These rules were already put in place when the market was being programmed, and now price follows those set of rules each and every time before delivering an expansion. Sometimes it may be clean, sometimes it may be rough, but price does follow a set of rules, or it plays according to a script before each and every expansion. Now, in this video, which I will be calling the script, we'll be taking a detailed look at BTC and ETH for the month of June, which was last month. For the first part of this lecture, which I will be calling aligning the time frames, we'll be looking at the analysis time frames. Starting with the analysis time frame, the first thing we'll be looking at, or the first time frame we'll be looking at, is the monthly time frame, which is on the screen currently. Now, with your monthly time frame, at the start of every new month, draw out the monthly opening price. So when you arrive at the front of your charts at the beginning of the new month, the first thing you want to do is to mark out the opening price for that new month. So since we are basically looking at last month's trading, the month has already closed, we're already in the new month. Let's mark out the opening price for the month of June before we proceed any further. So let me make this a bit much better. There we go. After marking out the monthly opening price, please, when marking out or making notes on the charts, make sure to also write a short, maybe like a name or a wording, so that you remember what that line represents. Because if you are not careful, when you have multiple lines in your chart, you may actually end up losing track of what you are actually annotating. So I'm ensuring to put MO, which means monthly open. So after highlighting the monthly open, remember at the start of every month you should make sure you do this. You can also lock it so that the line does not get moved at random. So what do you do next? Next thing you do, you look above and also below the opening price for information. What do I mean by information? You scan for what? Things like order blocks, SMTs, those things. Now you don't need to look too far, because whatever is concerning that month is going to be close by to it. So definitely for this month of June, I wouldn't be looking all the way up here and up here on BTC and then up here on ETH when we are down here. Like, it doesn't actually make any sense. So I will be looking in the region surrounding price at that moment in time. So at the moment when June was opening up, if we look closely, let me zoom in a bit. So on BTC, I will have marked out the opening price. Now above the opening price, what can we see? We can see at that point it looked like a swing was about to form, but it was not too clear. But what else can we see? Looking up, we can see price was rejecting from what? A bearish FVG. This is above the opening price of the month of June. So price was rejecting from bearish FVG, leading into this closure for the month of May before June opened. Then what about on ETH? On ETH, what can we see? you can clearly see that what price after May's close, price left what a bearish order block on the monthly. So above the opening price for the month of June, we can see a bearish order block on what ETH. Although on BTC there's no bearish order block, BTC was rejecting from a bearish FVG. So using ETH, we can get a much clearer picture because this is a strong order block. So we highlight what the order block. You can highlight the order block. Make sure to keep in picture the wick. The wick is important. So I'm only highlighting the wick to the opening price. But normally, if I highlight, I usually highlight the bodies. But in this case, I'm highlighting the wick to the opening price because price has already played out. And as you can see, price did not actually return to the opening price. Now, it is not a necessity for price to return to the opening price of order blocks. So now, already for the month of June, imagine June was just starting at that moment. You can see that you already have kind of like a sell idea building going into what? June. Now, once you have an idea of the direction, you should also have a target. This target can be refined on the daily time frame. So if from what we are seeing a bearish FVG after May's closure, rejection, close, then on ETH we left a bearish block. So likely where is price going to draw to? Price is going to be drawing lower, what, into old lows. So on the monthly time frame we can take note of this low, even though already price has taken it, but we are using old price action to kind of like read future price action. So let's make note of that low. So everything has already played out, but we're just using this to get an idea of how price delivers, or what I call the script. So you should have an idea of the target once you have an idea of the areas of importance. So we have the bearish order block on the monthly on ETH, and then we have the rejection from the bearish FVG on BTC. So already June is looking like what? A bearish month. So which means the direction should be what? Downwards. So if it's going downwards, it should be targeting what? Old lows. So once this is clear, check your weekly time frame to see if this idea can be refined. Ideally, the daily time frame controls the movement of the monthly candle. It gives you a detailed breakdown of that monthly candle for one whole month. So I'm referring to the daily time frame in this context. So yes, the weekly time frame is good when we're doing our analysis, but to get a clearer or a good picture or a great idea of how the monthly candle will deliver, this information can be gotten from the daily time frame, or the best time frame to get this information is the daily time frame. The daily time frame represents a much cleaner, refined picture of your monthly candle, because already on the monthly time frame you can only see one big candle, but by the time we go to daily you will see that this candle actually has a lot of information. Going forward, pay close attention to daily order blocks in regard to the monthly candle. So when we go to the daily time frame, all of these things will become much clearer. Now always highlight the start and end of every month at the beginning of the month. So when this month was starting, you can easily just get a vertical line, drop it down at the beginning of the month, and then drop it at the start of the next month. So you know that you have covered that whole month. When we go to the daily, the picture will be much clearer. So going forward, at the end of every month, do a look back. What is a look back? A look back is kind of like looking back at what the month was, even though you may not have participated in all of the moves or you may have missed some. Go back, track, and count all the other blocks that delivered that month. So when doing a look back of the monthly candle, what are you doing? You are basically highlighting the start of the monthly candle and the end of the monthly, while taking note of the little things which are did on the monthly time frame, above the opening price and below the opening price. The order block here, the bearish average here that is leading us lower, and then the old lows for the targets. So when you do a look back, you are going like taking a deep dive into how that month played out. And how does this help you? You gain information and you gain insights, and you understand how monthly candles deliver. That is what this does for you. And when you actually do a look back of a monthly candle, you do this through the lens of the daily time frame, because the daily time frame gives you a clearer picture of the monthly candle. Break them down. When you break down monthly candles, break them down in respect to the script, which is the market's pre-programmed mode of delivery. So now I'll be moving to the weekly time frame. So before I go to the weekly time frame, just a brief recap. What do we have here on the monthly time frame? Remember, I was studying the month of June, which is last month. This is the recap of the month of June. When we marked out the opening price, remember, when you mark out the opening price, you look above and below. You are trying to get an idea of how that month may deliver from the start of the month. From using May's candle on BTC here, you can see it's rejected from a bearish FG and closed downwards. So coming into June is indicating that there's heavy sell pressure, or there are more sellers coming into the market. So the market may want to push what lower. Then on ETH does not have a FVG, but it has a monthly order block, and that gets utilized in the month of June. So using these two information, we already have an idea on the direction of the candle. So the direction of the candle is, for the month of June, BTC and ETH are likely to print lower. So if they're printing lower, where are they going to target? What? Old lows. So we mark out the low. Now, looking at what is in front of you, you can see how that played out. It played out excellently well. So before dropping down to the daily, let's take a look at the weekly time frame. So the weekly time frame, please remember these levels on the chart are from the monthly time frame. I've not done anything yet as regards or in regards to the weekly time frame. So the weekly time frame supports the information we see on the daily time frame. It helps us build a better weekly profile, because every week has its own weekly profile. But over time, you start to see that weekly profiles repeat. The weekly time frame helps us refine our monthly ideas 1 week at a time. Now you can imagine for one whole month you only have one candle, but using the weekly time frame, what actually happens? You have, like, let's say 4 candles. So if the month is 4 weeks, you have 4 candles to focus on, 1 candle per week. But for the whole month, you have 1 candle. But using the weekly time frame, you have 4 candles to work with for the month. So we use the weekly time frame to what? To refine our monthly idea. Now at the start of each new week, I highlight the weekly opening price. So when the week is starting, always highlight the weekly opening price. The first week of the month will always align with your monthly open. So for that one, you don't need to highlight twice. You don't need to mark on the weekly and then mark on the monthly. You can just use the monthly open, but be conscious that it's also the weekly open for the first week. But going forward, as new weeks begin to open, you start to get new weekly opening prices, and you learn to work with them as you move forward. So the weekly time frame, what can we see? Already we have a bearish idea coming from the what? Monthly. So on the weekly, sometimes the weekly will not be as clear as the monthly or as the daily. So as much as I use the weekly, I don't use it as much as the daily time frame. I feel like the daily time frame gives a much clearer picture of the monthly candle, and it helps you align yourself better. When can you use the weekly? The weekly is good when there are SMTs or maybe like order blocks, just like in this case, like this week here. I know I'm going a bit forward here, but we'll come back again. So this is similar to what happened on the monthly time frame on BTC and ETH. Now observe here, let me show you what I'm talking about. On the weekly time frame, this week when we closed, we left what? A weekly bearish order block going into this last week of the month. Now observe something, just like on the monthly example with BTC and ETH. Here is the opposite. BTC is the one with the order block coming into this week. Now, what is ETH doing? ETH has rejected from an FVG or a FVG, closing up the previous week bearishly. It closed down below the opening price after rejecting from the FVG. So what does that indicate? It means that this candle, although there's no other block here, it's likely to go lower, and we support this with the idea of this other block here. That means this week is likely to be a sell week. So although the weekly may not always be clean or clear, but when you have SMTs or other blocks on the weekly, they can actually help you understand or get a better support or foundation for your daily time frame and your monthly idea. So once you mark out your weekly opening price, you do the same thing just like with the monthly. Look above and below. So using that same example I just used down here, so imagine now knowing that yes, this week is going to be a bearish week. What are you looking for? You're looking for lows to target. So this low would have been the nearest target over here, this low. And you can see how that low was pierced the following week. This did not pierce, but there was a SMT here. So there's a valid reason as to why it did not pierce. So let's not get lost. So the weekly, for me, it supports your daily bias or your daily idea, and also it supports your monthly idea. But the weekly is kind of like a bridge in the middle between the monthly and the daily. But to get a cleaner, clearer picture, I would advise you to focus on the daily time frame. So I'm not going to mark out the weekly opening prices from this time frame, but when I go back to the daily time frame, I will mark out individual weeks. So, or let me just do this before going down to the weekly time frame. Let's use our vertical lines. We'll just change the color so we know that these are for new weeks, new week opens. So let's use something a bit different. Let's use like a red. So let me put it on. So now we'll go down to the daily time frame. So there's not much here, because if you observe now, before I go down to the daily time frame. So considering the start of the month once again, because this idea was for the month of June. So when June was opening up on the weekly time frame, you can see there's not much to work with around the opening price here on the weekly. The nearest bearish order block was all the way up here on BTC, which is quite far. So there was not much to work with in regards to the other block, but you can see on ETH, this was the weekly candle for the first week. You can see how it opened and the opening price went up. It tapped the monthly bearish order block. It tapped it before selling off. So although there's nothing like a bearish order block or SMT that you can visibly see here, there's still the monthly level being used by this weekly candle. So you can see how or why I say the weekly may not be too clear sometimes, but as we move forward, you will be able to understand how to use the weekly to support your daily idea. So let me just move down to our daily time frame. So the daily time frame is a very big time frame for me. It is a very big time frame because it plays a massive role, a very, very big role, a very, very important role. Let me just arrange this, sorry. So the daily time frame plays a very, very important role. Now, before I start breaking down the daily time frame, let's just talk a bit about the daily time frame. The daily time frame acts as a balance between the higher time frames and the lower time frames. So this daily time frame that you see, it acts as a balance between your monthly, your weekly, your 6 month, 3 month, however high you can go. It acts as a balance or a bridge between those higher time frame and your lower time frame, your H4, H1, H2, H3, 15 minutes, 5 minutes, 10 minutes, so on and so forth. It bridges those time frames together. The daily time frame is the purest internal view you will get of your monthly candle. Although yes, I said the weekly supports and gives information as to what the monthly may deliver, the daily gives you a clearer, a purer internal view. Like imagine you could see inside of the monthly candle. The daily gives you a clearer picture of that monthly candle. So for the month of June, from here up until here, you can see how on the daily now for that 1 month of trading, there's a lot more information on the daily time frame as opposed to the monthly and the weekly time frame. Daily order blocks move both short and long-term trends in the market. Now, the daily time frame is so important that if aligned correctly, like imagine this sell from that high to this low, the same thing on ETH. Imagine the sell that took us from when the month opened all the way to that low. Very big sell. This is even on the daily time frame. So the daily aligns you with big moves or short moves, whichever one. So that's why I say it aligns you with both short and long-term trends in the market. When you make use of the daily order blocks on the daily time frame, you can position yourself for some sweet entries and for sweet long and short-term trending moves. The daily time frame order blocks are the best way to align yourself with higher time frame trends intraday. So when you trade intraday, to get better win rates or better strike rates, you will not always win, but to improve your odds, you can use the daily time frame to align your intraday moves. When dealing with daily order blocks, we focus on the body of the candle, but we remain conscious of the wicks. So soon I'll be highlighting daily order blocks for this whole month of June. And when I start highlighting those daily order blocks, I may highlight the bodies, but I will be very cautious of the wicks. You will see what I mean by that as I go forward. So when I also talk about the look back for the monthly candle, this is what I'm doing now. This is a look back. So the month has finished playing out. Now I'm looking back at the month. How did this month play out? What am I going to be doing? I'm going to be highlighting every other block that concerns this month, both the on trend and off trend, the bearish order blocks and also the bullish order blocks, because each and every one of them played their own role for the month of June. So this is essentially what a look back looks like. So I'm about to do a look back using the daily time frame. So soon I'll start highlighting all of our order blocks. Your monthly order block is a true break of structure on the daily time frame. So I will touch a bit more on that, but your monthly order blocks are a true break of structure on the daily time frame. So each individual order block that you see on the monthly time frame, when you actually now understand what is happening in the marketplace and how the script plays out, how each and every one of these time frames are connected, because by now you should start to see that there's a connection between these time frames. Once you start to get an understanding of that, you will now see that your order blocks are formed where true break of structures occur. Your monthly order block is basically, simply put, a daily break of structure. Your daily order block, soon you find out, and your H4, your H1, you also find out what break of structures they are or represent. But I believe this lecture will open up your mind to know that your order blocks are also break of structures on a time frame below them. We use the daily time frame to refine inside of our monthly order block. So soon now you see me, I'll start refining when I start highlighting these daily order blocks, so that you can get an idea of how the month of June played out and how you could have been a part of it. 60% of the time, the new month candle moves using a daily order block. Therefore, do not play with your daily order blocks, especially the ones at the start of the month. So this part is very important, because this is going to be the first thing I touch on as I start analyzing using the daily now. I'm going to be focusing on the daily order blocks, but specifically the daily order blocks at the start of the months. So let's take a look at the daily time frame to round up our analysis time frames before we move on to this main part of the scripts and also what I call the execution time frame. So on the daily time frame, you don't need to stress yourself, or you don't need too much noise to cloud your judgment. What are you looking for? The same way we have been approaching. Now we're ready for the first week of the month. Remember, the first week of the month, the opening price will align with both the monthly open and the weekly open. But you can see the other weekly opens, they are the ones with this red vertical line, so I don't need to mark them again. But at least we know where the week begins for those particular weeks. So we start from here, the first week of the month. So the same way on your daily time frame. Now, when I arrive at the daily time frame at this moment or at this point in time, am I still clueless? No, I'm not clueless because I have the weekly, the monthly backing this sell idea, but specifically the monthly, because the monthly is the one with the bearish FVG that was used on the daily over here, the bearish FVG on BTC, monthly bearish FVG, sorry, and the monthly bearish order block that was used on ETH over here. So I'm not just trading cluelessly or blindly. I'm working with information from the monthly stroke weekly time frame. So at the start of this month, I have a what sell idea based on my monthly and weekly time frame. So how do I utilize that sell idea? I'm going to be using those levels which are highlighted from the monthly, but in connection with the daily. Now remember I said you can refine your monthly order block to the daily time frame. What do I mean? That means at times you will find out that where your monthly order block, maybe the week or the opening price is, there will be a daily order block that aligns with that level. So let me just zoom in here a bit. Let me zoom in. So if you observe at the start of the month, well, because if you remember ETH closed a bit, well, let's just take a trip to the monthly time frame before we continue. On the monthly time frame, if you remember, let me zoom in a bit. If you observe, BTC does not have a bearish order block. Only ETH has a bearish order block. So at the point of this new month starting, there's nothing on the monthly time frame for BTC to reference. But ETH has what? The monthly bearish order block as a reference point. If we go to the weekly and we check the weekly, likewise on the weekly, there's still nothing for BTC to reference. There's no bearish order block, there's no SMT around there. But you can see again, ETH still has that bearish order block from the monthly to reference. So by the time we go to the daily, when looking for order blocks that align with the monthly order block on the daily time frame, we can only do that with ETH, because ETH is the only one with a monthly order block. BTC does not have anything to reference around this area from the monthly or the weekly, but on ETH we have this what monthly bearish order block. Now if you observe closely, remember on the daily we're not getting lost. On the daily we only pay attention to two things: the daily bearish SMTs and the daily bearish order blocks. Specifically for the scripts, you pay attention to the order blocks. So what are we looking for here? Essentially, we're looking for the first order block of the month, number one, or we're looking at the first order block of the month. But not just that, this order block is also embedded or is planted inside of what? Let me zoom into ETH. Inside of the monthly bearish order block level. So this gives it even more support. So this is not just a daily bearish order block, this is a daily bearish order block planted inside of a monthly order block at the start of the month. So you can see how powerful the order block should be. So this is the first order block of the month. I'll be marking it out because if you can see, it's only by the way, it's only ETH that has a order block, or that had a order block at the start of the month. It was only ETH with the order block, if you can see. BTC do not have a bearish order block at the start of the month. It later permitted it, but it closed far away from it. But at the start of the month, we already had a what? Bearish order block on ETH. And this order block also aligns with our monthly order block. So this is a very good order block. So easily you can trade from this order block. So I'm about to mark that order block. But before I mark it out, now you can observe now for the first week, that was the only order block that we had. Like there was no order block for that week. The week just opened and ran straight down. So for the first week, we did not get any order block. We only had one order block, which was at the start of the month. So if you had missed this order block at the start of the month, you can see how there would have been no opportunities. But as we move forward, you will see that there is actually opportunities that just do not show up on this time frame. So let me mark out the other block for this first week. We will not be dissecting the other block straight away, but once I've marked out all the other blocks on the daily time frame, then I will come back. Once I've marked out all the other block on the daily time frame, I will then go lower on the time frames, looking at them individually. So let's quickly mark out all the other blocks. So this was the first other block. Now this is what I mean when I say when marking out other block, we focus on the bodies. So over here, I'm going to focus on the body of the other block. 1 second. So I'm going to be using a different color so we don't get mixed up. Let me change it to like a darker green. Okay, the darker one is better. Let me leave it as this. So this will be the generic color I'll be using to mark all other blocks. So this is our first other block. Now this BTC later permitted the other block, but this other block was permitted later on. ETH already had the other block at the start of the month. Please note the difference. BTC permitted its own other block at the close of the first day of the month, and when it closed very far away from it. So now, although I'm marking out the body with the box, I'm also very much aware of the wick of the other block. So the wick is also marked out. I'm marking out the wick. It's the same thing I'm going to do here. Now we have a double body or a double candle other block here. 2 buy candles, then we close below the opening prices. So that's why I say I marked both of their bodies. But for the wick, I will not use the longer one. I'll just use the shorter one. So, but this is just to highlight that we are trading inside of this other block at the start of the month. So this is the first other block for the start of June, and it also aligns with our sell idea for the month of June, which we got from the monthly time frame backed by the weekly. So this is our first order block for the month and also the first week of the month. So that week we had a nice sell-off. We didn't get any other entry on the daily time frame. We sold off quite nicely and then we took the low. So we even from the first week of the month, we went straight for the target. You can see how crazy that is. So imagine you not joining this move up here. You would have missed this whole opportunity, or imagine joining and you didn't even hold. You would have missed this whole opportunity because this was a massive move. That's why you need to be careful, or you need to be aware when you trade in line with the monthly time frame, because monthly expansions can end up being extremely big. So after hitting the target, we have some new order blocks being created. So I'm just going to quickly highlight the other blocks. So we have the other block over here. Now, like I said, I'll be highlighting the bodies, but I'm very much conscious of the wick of the other block. So just bear with me. So I don't know, maybe I'll cut out this part so that it doesn't get too crowded in the video. So after marking out the other blocks, I'll be going to the 4-hour time frame, because that's where I'm going to be doing my next explanation or my next refinements, which will be me refining the daily order blocks. So let me just quickly do a quick markup of all of the other blocks on the daily for the month of June. So on BTC here, this is a case of a multiple candle order block once again. So over here, like I can easily just do this. I can mark out all of the bodies just like this again, because it's a multiple candle order block. But if you decide to use this one, no issues. But it's just to keep you aware that there was a multiple candle order block there. Then here we didn't get a multiple candle order block, but this is also okay. So I think in a way this is why it's not too bad. I'm recording while also annotating the video, because there may be some things that I will highlight while I'm annotating the other block. So remember, these lines, these red lines, at the start of these individual weeks. So after the first week, this is the start of the second week, the third week, and then the fourth week. So let's be aware of that as we move forward. So opening price for this week, and then what, we drop lower, and as we drop lower, remember, that's why I say I like the weekly open and then look below and above. Now below the opening price for this week, we had a bullish order block below, and above we didn't have anything at all. We just had plenty of range to cover above. So you can see why that buy that week was so much logical. I will soon highlight the other block. Then this week over here, you can see we have a bearish order block. Starting this week. So this week, on the opening of this week, if you look above, there's no bearish order block or anything, but there are bearish averages. Likewise here, as we go above, there are bearish averages for this week. Let me expand this a bit so we can see. So we're tapping bearish averages, but below there's nothing. Like up until here, this is where the first bullish order block appears. So at the start of this week, when we look lower, there's a bullish order block down here on ETH2. Then above, just bearish averages. So there's not really anything around here to work with. So we needed more information that week. Then by the close of Tuesday, we have more information. By the time Tuesday closes and leaves this bearish order block, what do we have? We have a bearish order block around the start of the week. You can mark it out. And then we have a bullish order block down here. So logically, price will want to go back into the range and into the other blocks. And that's what is happening here. It drops down and it taps the other blocks over here. It drops down and it taps the other block over here. And the same thing here from there, even though this does not have a bearish order block on that same Tuesday, we can use the information from BTC and then we work with that information. And then as we drop down, as you can see on Wednesday, we're trading with the bearish order block. We react to the bearish order block on Wednesday and then we sell back. So for this week, although when we opened at the start of the week, we did not really have like something around here or something close by to work in with, like a SMT or order block. By Tuesday, we had more information, and then by Wednesday, you could have traded. And then we came back into the range. Then this week, once again, we open. Above, what do we have? We had the bearish order block here. And then we had another one above here, and also FVG. Then below, what do we have? We have old lows, and then a bullish order block. The same thing over here on ETH. Above, bearish order block, bearish order block. At the start of this week, we had what's the opening price, and then we went up above. Above we had what's a bearish order block here, and we had a bearish order block. Although here we have overshot it, this is all in front of us now because it has played out. But at the start of that week, you could not have known that this would have happened. So we had a bearish order block here and a bearish order block here, and we overshot and we tapped it and we rejected. And then we went for these lows. So above the opening price, we had other blocks, bearish order blocks, and below we had a bullish order block down here and old lows. The same thing here. Above the opening price for that week, we had a bearish order block, and then we had old lows and then bullish order block. So after going up, rejecting the bearish order block, we crashed lower, back into the range, and back into the bullish order blocks. So I think that was the last week for that month. I don't think there was sorry, let's see. I think there was one more week. So on Monday, okay, it kind of runs into the new month, so let me just leave that out. So I think this should be the last week. So already, as you can see, these lines represent the new week opens for each week in the month of June. And I've kind of like gave a brief breakdown of how each of these opening price kind of like played out for those specific weeks. So let me finish highlighting the other blocks now, since I've just done a quick run through of what happened. So we have another other block here. So I think now I can let me just highlight the other block and then we'll continue on with the lecture. So yeah, I think those are all of the other blocks. So now let me do something else. Now I'm going to be highlighting the specific days that's traded into the other block. So I think for that I should just use let me use this. Come in 1 second. Let me get this. So I'll be using this arrow down button. So on this day, this was when ETH traded into its other block at the start of the month. Now notice that although BTC does not have another block, I'm using the momentum or the idea from here to expect the same delivery here. So that's why, although yes, there's no other block here, I'm expecting the same sell idea to play out. So the first opportunity there, then we had another one down here. This is when it started again. So the specific day was on this day. This is when we arrived at the other block over here. So this one did not actually get into its own other block, but on that same day that was there. Just a bit closer. Then we had another opportunity over here. So I'm marking this out so that by the time we go down onto the lower time frame, we will not lose track of anything. Then we had another one here. That should be right there. Then we had a sell opportunity up here. Just like the other one, BTC has another block, but ETH does not have another block. So we use the idea that we have from here to trade ETH. So let me mark that. That was on this day over here. Then we had some more opportunities here on this day here. Then one more opportunity here. Now over here, you see the way they dropped. This low was created at this daily order block or this series of order blocks. So let me just add this in as we study. So in a way, we can also study this low that was created here. And that is so important, but it's okay to study it also. I think that was all. Yeah, that should be all. So this is even good enough. It's not many because it supports the idea of you don't need much in the marketplace. You don't need every move. You don't need every expansion. You just need specific expansions that play according to the script. Those are the kind of expansions that you need. So now that we've highlighted the daily order blocks, now we are going to move forward we're not done, but we're about to take a step further into understanding how the script plays out. So in this next part of this lecture, I will be covering the execution timeframes. So we have covered the analysis timeframes all the way down to the daily, starting from the monthly, covering the weekly, and ending up with the daily timeframe. Now we're about to bridge the daily with the lower timeframe, the scripts. When I taught you about daily order blocks, I taught you from the perspective of an SMT trader. Now I'll be teaching you from the perspective of the person that coded the markets. So in simple terms, what am I trying to make you understand today? When I talk about the script, I'm not talking of magic or something new. I'm talking about what already exists, something that has always been there in front of you. I'm just bringing it to your understanding because the script was always there. The script is basically how the market was coded. All I'm doing is breaking it down step by step for you to understand. So now let's move to the execution time frame. Let's start with the 4-hour time frame. So let's drop down to the 4-hour time frame. And let me reset that. So we're only focused on the month of June, remember, so we don't need every month. We just need to focus on this specific time window over here. So the 4-hour time frame or the H4 time frame. This time frame acts as a balance between the daily time frame and the lower time frame. So observe, I didn't say the higher time frame and the lower time frame. The H4 or the 4-hour time frame acts as a bridge or a balance between the daily time frame and the lower time frame. It is actually the purest internal view you will get of your weekly candle. So the same way your monthly candle can be best seen on the daily time frame, your weekly candle can be best seen or analyzed on the 4-hour time frame. So the 4-hour time frame gives you the purest internal view. Like if you're able to open up your weekly candle and look inside of it, the best structure will be seen on the 4-hour time frame in regards to your weekly candle. The 4-hour order blocks or H4 order blocks move lower time frame expansions. When you actually pay close attention, you come to discover that your 4-hour order blocks actually move your lower time frame expansions. H4 order blocks are the best way to align with intraday session expansions. You can use your 4-hour order blocks also to align with intraday session expansions. We track H4 candles using the 159 logic. So what do I mean by that? I mean that when we are studying through the lens of the 4-hour time frame, we time the candles using the 159 logic. What do I mean by 159? 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. That is how we track the daily candle intraday using the 4-hour. 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., and 9 p.m. So we use the 159 logic when tracking the 4-hour candles. BTC and ETH 4-hour time frame automatically follows this logic which I just outlined. But for other markets where the H4 doesn't align, like your Forex, your indices, where if you go to the 4-hour, you see 2, 6, whatever, 10, 5, like very random timings. There you can use what? You can use your 1 hour to outline 4-hour openings and closings. So you can just go to your 4-hour and mark out 1 a.m., 5 a.m., 9 a.m., 1 p.m., 5 p.m., 9 p.m. using your 1 hour time frame, because the 4-hour will not allow you to see it, just like how BTC and ETH does for us. Now, that order block you see on the daily time frame is actually a true break of structure on the 4-hour time frame. I made mention of this when I was on the daily time frame. So that order block that you see on your daily time frame, on the daily time frame, you see one daily order block, but on the 4-hour time frame, that is actually what? A true break of structure on the 4-hour time frame. Now, what is a true break of structure? A true break of structure is a true break of structure is a break of structure that creates an higher time frame order block. For example, your daily order block, your 4-hour order block, even your 1 hour order block. So a true break of structure leads to the creation of an order block. We use the 4-hour time frame to refine inside of our daily order block. So when we deal with it 4-hour time frame, we're not just dealing with it for the sake of it's the 4-hour. We actually make use of the 4-hour so that we can refine what we see on the daily. So the daily order blocks can be best refined on your 4-hour time frame. So before I start breaking down these candles that you can see in front of you, let me just expand a bit more on the 4-hour time frame. You are 90% more likely to find strong 4-hour order blocks around the area where your daily order block was created. So if you pay attention to the areas soon, as we'll be seeing, you pay attention to the areas where your daily order blocks are created, you will see good or strong 4-hour order blocks that you can use to frame trade ideas. Ideally, after the reaction at a daily order block, price tends to create new 4-hour order block. So when price reacts from your daily order block, most of the times it will move and then it will create what? A new 4-hour order block after reacting to the daily order block. Focusing on the daily order blocks and refining them on the 4-hour time frame helps you get better entries intra-week. So if you use your daily and then you refine it on the 4-hour, you focus on these same steps every week, week in, week out, you'll be able to refine your entries and get better entries that are in line with the intra-week trend. It gives you better idea of which sessions to focus on. Imagine now, for example, you have a 4-hour candle, or a 4-hour order block leading into your New York session by 1 p.m. So automatically you know that 1 p.m. New York candle is more likely to deliver in line with the order block that has already been created beforehand. So it gives you a better idea of which sessions to focus on and which sessions to avoid. Most of your H1 SMTs are linked to H4 order blocks. You may not know, but they're actually linked to H4 order blocks, or they are linked to H4 order blocks that are embedded inside of your daily order blocks. So most of the times you just see SMT on 1 hour, but what you don't actually know is that it's occurring inside of a 4-hour order block that sometimes is actually inside of a daily order block. H4 order blocks are a confirmation of the weekly trend. Sometimes they will form outside of daily order blocks area and still play out, but I urge you to focus more on H4 order blocks that are embedded inside of daily order blocks. Always remember, at times price will create an order block but fail to use it at that moment. Ensure to take note of that order block for future reference. I repeat, that order block that you see on the daily time frame is actually a true break of structure on the 4-hour time frame. So now let's take a dive into the 4-hour time frame using the levels that were marked out on daily. We start again at the beginning of the month. So before I go too far, let me read that point again. Sometimes H4 order blocks will form outside of the daily order block area, but I urge you to focus more on H4 order blocks that are embedded inside of your daily order block. So sometimes you will see 4-hour order blocks, as you will see shortly. They will not form around your daily order block area, but they are still 4-hour order blocks and they will still play out. You can trade them. I'm not here to stop you from doing whatever you want to do, but you should know that your 4-hour order block that aligns with your daily order block is definitely more stronger than your 4-hour order block that is just standing by itself. That is just what I want you to take note of. So starting with the first example here, if you remember, this is the first daily order block at the start of the month, and it also happens to align with our monthly order block on ETH. So as you can see, this is the return. So the order block was already permitted on Sunday's close. Sorry, not Sunday. Sunday's close. When Sunday closed, we permitted the daily order block. Now, if you can see over here, this is what I mean by daily order blocks. Yes, this is what I mean. Daily order blocks are actually 4-hour break of structure. If you remember, only ETH has what? A daily bearish order block. And it's actually the one that has a clean break of structure. You can still retreat into this low and close this with a body. So it has a cleaner break of structure. So that is why it also has a nice order block. So now on the 4-hour, how do you make use of the 4-hour? The 4-hour, all you need to pay attention to, the same way we do on the daily, 4-hour order blocks and 4-hour SMT. Now, after the order block was permitted on Sunday's close, coming into Monday, you can trade the return into the order block. But how can you trade it? By refining it. So what do I mean by refining? Refining means that same area where the daily order block is, can we find a 4-hour order block around there? And yes, we can. If you look here, there's a 4-hour order block. This 4-hour order block was created when? After this 5 a.m. 4-hour candle closed. So before that, let me just start again. 1 a.m. this is the start of the Monday candle. Now, if you mark out the weekly opening price using the 4-hour, now remember there's a daily bearish order block around here on ETH and also a monthly bearish order block. So on ETH, when we open for the day and also for the week, we're trading back. When we go up, we're trading into the daily bearish order block. Now around here, if we look, we're looking for what? Our 4-hour bearish order block that aligns. So the first one is over here. This is inside of your daily order block, the structure that forms it. So this is the first order block. So the 1 a.m. candle trades into it the same way over here. So this would have been your first entry. So what if you don't get it? Remember what I said. I said most of the times, after the reaction to the order block, this is why I had to restart my explanation so that you understand that there's a difference between this order block and this order block here. This order block already existed inside of the daily order block structure. This order block was just created. Let me zoom out a bit. So let me explain again. This order block already existed. This order block was created after the reaction from the daily order block. If you observe, we opened for the new day, traded into it, and then we broke. And then we formed this new 4-hour order block. The same here, 4-hour order block. So this order block was formed after reacting to the daily order block. So this is what I mean, that sometimes price will react to what? The daily order block and create a new 4-hour order block. Whereas at other times, if you look around the area where the daily order block was created using the 4-hour time frame, you will discover that there is maybe like a old 4-hour order block that price has not already used, just like in this case with ETH. ETH had a daily bearish order block. So ETH had a daily bearish order block around this region, and inside of the order block there was this 4-hour order block which was not already used. So you can see how it returned back to it and then it tapped it and rejected. And after rejecting, it created a new 4-hour order block. So if you had not gotten this early entry, you could have used the new 4-hour order block here that was created to still get in line with the trend at the start of the week. So we trace back into the daily order block and also the new 4-hour order block, and you can see it still aligns with the daily order block level. Here we did not get a retracement. This order block was never used. So you can see how using that area, that region, and also using this 4-hour order block, you could have refined your entry from the daily. Imagine on the daily now you would have had to use this full range as the daily order block, but using the 4-hour now you might just use just this candle here. If you had gotten in early, you could have used just that candle. So the 4-hour allows you to better refine your stop loss, and most at times, like I said, the intraday or intra-week expansion will occur through your 4-hour time frame. So now imagine by 5 p.m. you see price trading into this bearish order block. You will know that maybe around that 5 p.m. time, or that session, which is basically the last session of the day, this could be where the sell will start. So using your 4-hour order block, it allows you to better know which sessions to trade. So let's move forward a bit. So this is the first daily order block example. You can see how the 4-hour order block aligns so nicely with that level and how it was used, and then we drop lower. So as we're dropping lower now, this is when I begin to touch on what I explained, that sometimes you will see 4-hour order blocks form outside of daily order blocks. Over here, I don't think maybe, okay, I think we also did, let me see, this was, where was that? Okay, that was around the same region. So over here on Bitcoin, you can see BTC has already left the daily order block level, and then it creates what? A new 4-hour order block. Now, although yes, this 4 hour block is not at a daily level. Can you trade it? Why not? As long as it aligns with the idea that you already have, which is a bearish idea for the month of June. So when we return here, there was a SMT occurring because this one retraced deeply into its bearish order block. This one did not come back, and then it created a new order block. So how can you align yourself on this day, this Tuesday? Remember what I said about 4 hour candles. It allows you to know the session or a specific session that is supposed to make that delivery or that you can focus on. So it allows you to focus your energy on specific sessions and not just every session. So imagine now you are aware that this 1 a.m. candle after closing at 5 a.m. permitted what? A bearish order block at the close here. So what does that mean? That means you can easily, comfortably trade inside of the 5 a.m. candle. You can anticipate this candle to use its bearish order block to sell lower. So you can see how that plays out beautifully. So easily you could have focused your energy on trading the 5 a.m. session way before London open. You could have been inside of the move. So you can see how your 4 hour time frame helps you realign yourself with the weekly trend. So if we push forward, can we see more examples? Please, I will not be marking out the 4 hour order blocks. I just wanted to bring your attention to them, but I will not be marking them out. But I think maybe at the end, I will just maybe use a few to kind of like further explain some ideas that I have from the 1 hour time frame. So for now, I'm just going to just more or less just kind of like show you how 4 hour plays a big role in your weekly delivery. So the next 4 hour order block, we had one here. So you can see more and more as we trade far away from the order block, we're starting to create order blocks that are not embedded inside of daily order blocks. These are just standalone 4 hour order blocks. They are just by themselves. They don't have any support or backing. We had one here. We use it, we trade. So you could have focused on the 1 a.m. session here easily. And then we spent some time there and then we finally broke down. Then we created a new order block here at 9 p.m. So easily you could have focused on the 9 p.m. session. So you see how using your 4 hour now, it allows you to, in a way, know specific sessions to focus on instead of trading all the sessions. Soon we'll get back into some daily order blocks so you can see the beauty of it, because the beauty is not really with the standalone 4 hour order block. It is with the order blocks that align with your daily and your other higher time frame ideas. So slowly, as we get close to the low, we are about to take the low, we see how we start to get more and more rough with the price action. But you can see that still we see 4 hour order blocks delivering. Yeah, you could have really traded in London, spend some time, created a new order block. 5 a.m. once again, if you're active, you can trade both BTC and ETH. They both have order blocks at 5 a.m. So you could have easily focus your energy at 5 a.m. over here, and then we'll create a new order block 9 a.m. So see how easily. So this is why I really wanted to do this lecture, so that you can see how in a way you can still position, because I think when I taught you as an SMC trader, and it really had a lot of implications on the way you trade. It didn't allow your mind to be exposed the way I wanted it to be exposed. So this time around, I'm trying to rectify that mistake I made at the start. I want you to see the chart from the point of the person that created the script. Yes, the SMT still exists. Yes, you can still use it. But now your energy should be more focused in seeing the chart from a full point view, a overview, not from a specific point of view, like through the lens of SMT. So I want this lecture to show you that as long as a trend exists, there will be more entries as it proceeds to its targets. And until it reaches that target, there will be multiple opportunities for you to get on board. But if you are focusing only on the daily and maybe 1 hour, you might miss opportunities that you could have used or utilized. So that is why I wanted to touch on this, so that you can see how so much easily, like, you could have just aligned yourself throughout the course of that week using the 4 hour, not necessarily needing to even go back to the daily time frame, because if we check the daily once again, throughout that period there was nothing on the daily to work with. As you can see, we just sold straight to targets. So on the 4 hour there was only one order block for the first week of the month. So now let's go back to the 4 hour as we proceed into the second week of the month. Let's take a look at the second week of the month, still using the same ideas. So the second week of the month started over here. The line is not too clear, but right here. So let me zoom in a bit so we can focus on that area. So yeah, so for the second week of the month, remember, you mark out the opening price for the new week, and then you check above and below. So for this week, you can already see based on the other blocks I've outlined, there was a bullish order block down here, and so there was another bullish order block up here, but one at a time. We first had this order block before we had this one. So for the first order block, which is down here, this green line and this box and this green line, you can see when we open for the week, we traded back to the other block, back into the other block. Now, this is what I mean by refining. So when we look at the area, the region of this other block, which is down here, the first other block, this area here, we look for what? What are we looking for? We're looking for, since we're now on the 4 hour time frame, remember, these are daily order blocks. So the daily order block that was marked out here, we're looking inside of it, and we're looking for what? The 4 hour order block within that region to refine. So if you look down here, you can see just around where the body of the order block is, there's a 4 hour order block there. Multiple. You can use this one, or you can use the multiple. And you can see the price taps it nicely twice, and then we end up buying. And on this guy, yes, we did not get back to the other block. We did not tap its own other block. But I believe that is because of the 4 hour order block over here, because you can see the way it's reacting to it. But this other block, like I've taught you now, by now you should know, this is a standalone order block. This other block is not embedded into a daily order block, whereas this is embedded inside of a daily order block. So in a way, you can see how you could have easily pinpointed the precise level inside that daily order block by refining from the 4 hour. So as I don't think we got there on Monday. So on Monday we didn't get there. We got there on Tuesday. So we got down here on the 4 hour, we tap here and we react. So now, remember, you're on the 4 hour, you're only concerned with 4 hour SMT and 4 hour order blocks. When we came here and we tapped, there was no 4 hour order block, as you can see. Then we tapped again. I think there was no SMT here. Was there SMT? No SMT. We tapped again here. And as you can see, when we tapped over here, this is when the other block was created. It's like, I think there was SMT. Okay, it was later on. So yeah, so when we later now tapped again, the 4 hour order block, also the daily order block over here, you can see the reaction led to the first 4 hour order block. So you can see how, like I keep saying, at times, if the other block is not already there, like in this case, the other block was already there. Yeah, the other block was already there, but we did not tap it. Then you can wait for a new order block to be created. So like in the case of ETH that didn't tap its daily order block, you can wait for a new order block. And you can see how we got a new 4 hour order block. And then we return to it later on by 5 p.m. So by 5 p.m., as you can see, we returned into the order block. So you could have either gotten inside the 5 p.m. candle if you were trading, or even by 9 p.m. we're still there waiting. And then we had the second SMT reading the low of this order block, and then we close, creating a new order block. So you can see that BTC did not make that second raid. So if you were inside of BTC, you would have been inside the move, you would have not been stopped out. But ETH would have stopped you out. But if you were around, maybe I would have gotten on using the SMT, or you wait for a new entry using the new order block that was created over here. So we create new order block, then we return back into the other block. So you see how easily by New York, you could have easily positioned yourself either during New York or by 5 p.m. By 5 p.m. by New York is when we arrived inside of the daily order block over here, because this is a new daily order block. We had a new daily order block, and then we return to the other block over here. So before I get there anyways, so we had a new order block here, we return to the other block. So if you didn't get in using this other block, I don't think, okay, we touched it over here. By 5 p.m. we touched the other block. So you can see how inside of this daily order block, once again, if we refine, we could have used this daily order block. We could have used this daily order block over here. Or if you wanted to use the multiple candle order block, because we close above with this body over here, we close with this candle. So you could have used the multiple candle, you could have used the singular, whichever. So we later come back and we touch it. This order block is embedded inside of your daily order block. This, on the other hand, yes, is also embedded inside your daily order block. We have the multiple candle order block here also. We come, we tap it, and then we continue. We create a new order block. So now you start to see how your 4-hour order block plays a big part intra-week. Now, at the start of this new day, once again, you see the way we, at 5 a.m., we drop into the order block. So easily at 5 a.m., you could have positioned yourself using this order block, and then we create a new order block. See, it just in this series of this move here, just imagine how many 4-hour order block opportunities was provided. So we created a new one over here. This also aligns with the daily order block. Inside of the daily order block, we have the 4-hour order block, and then we tap it over here at 5 a.m. We react to create a new one. We come back at 1 p.m. So see how easily at New York you could have used this other block to position yourself. Come back inside of the other block, and then we push higher again. So we'll create a new other block over here. Then we'll return inside of the other block right there. We'll return back into the other block around here, as you can see. Now you can see how, as we're returning back inside of this daily order block, where we're returning inside of the 4-hour order block that aligns with the daily order block. Likewise here, we will trace back into the 4-hour order block that aligns with the daily order block. So you can see how slowly and slowly this is starting to look like a script that just repeats. Price creates a daily order block. You go to the 4-hour time frame, you observe, and you see that around that area there are 4-hour order blocks overlapping. You can refine your entries using those 4-hour order blocks, and using those 4-hour order blocks you can get specific times or sessions that expansion may occur, and it allows you to better refine your stop loss. And most of the times that whole range of the daily order block will not be utilized. You only need to utilize the area where the 4-hour order block has been refined to. So inside of this daily order block range, we don't need to enter from up here. We can decide to anticipate a return back into the area of the order block where the 4-hour order block is. Sorry, the area of the daily order block where the 4-hour order block is, which is down here. You can see how we drop down into it nicely. I think there was the SMC or not. Okay, no SMC, so the same way we drop down into the 4-hour order block aligning with the daily order block, and then we take a nice buy once again. So we buy a bit higher, we come up here, then over here I think it was only BTC with another block at this time. So only BTC had the other block up here, and then it's returned into the other block. You can see how when it returns into the other block, it's returning into the old order blocks, the pre-existing order blocks around the daily order block area. As it returns there, sells off, creates a new order block. So if you're trading at 9 a.m., you see how easily you could have positioned yourself for the sell. Then we see a buy later on coming back into the range for a second raid. So this kind of thing also occurs every now and then when you get like an SMT on the 4-hour time frame inside of a daily order block, but on the 4-hour time frame it looks like it's occurring inside of a 4-hour order block. Why? Because the 4-hour order block is embedded inside of the daily order block. So this SMT that occurred here at this point is occurring not just inside of a 4-hour order block, but you need to be aware of the fact that this is the daily order block area. So it makes it even stronger as an SMT. So you can see how from here we broke down, create a new 4-hour order block. We return to it around 1 a.m. So you see how easily at 1 a.m. you could have positioned yourself to join this move. You could have focused on the 1 a.m. session. And then from there, we broke down, created a new 4-hour order block. Now this 4-hour order block over here is not inside of the daily order block, so it's not embedded inside of it. So when we create the new order block, we create a new order block here, the same on ETH. So by 1 p.m. again, you could have positioned yourself for sales. So I repeat again, why am I showing you this? I'm showing you this so that you can better refine your intraday entries, and so that you can have better focus point or a better idea of where that session may go, the direction in which that session may deliver in. As you can see, just by focusing on your 4-hour order blocks, you can see how, just as for example, imagine trading on this Thursday, New York by 1 p.m. Do you know how much confidence you would have knowing that this 1 p.m. candle is likely to sell lower? Or when this SMT is occurring up here at this moment in time, on 1 hour it would just look like your normal SMT, but imagine having this full picture of what is happening. Not only is this an SMT or a SMT, this is a SMT occurring inside of a daily order block at a refined 4-hour order block over here. The same thing here, that same candle is stabbing what into its 4-hour order block over here. And there's also an SMT occurring, or a SMT occurring, sorry. So I'm showing you this to help you better refine your entries and also help you keep focus during the course of the week. Then we also have another example down here. So after we sold back into the range from the daily, the old bullish order block range down here. I added this example because this example is not just like, it's not like the other examples we've had from up here. It's not the same with the examples we had up here coming all the way down here and then coming to this sell. So this buy example is a big retracement back into a daily range. So a return back into the discount of that range. So when returning there, we're returning back into some old order blocks. So the same way, we can still look inside of the order block and look for areas, specific area or a specific inside of the daily order block. We can look inside of the daily order block and find refined 4-hour order blocks. So we can look inside of the daily order block within this area and find refined 4-hour order blocks. So you can see this is that same order block that was used over here. We have multiple 4-hour order block here. As we return, we come back into the daily order block and back into this set of order blocks. Likewise here, you can see here we had a very clean 4-hour order block that was utilized. As we came back down into the range, I think there was SMT occurring here, but there was SMT. This BTC was taking these lows. BTC took this low as well. I don't know if we took that low. Yes, we took that low as well. But you see how ETH could not take that low. So ETH stopped at where this 4-hour bearish order, 4-hour bullish order block, or 4-hour refined bullish order block, which is inside of a daily order block. So I added this example because it is a full-on retracement, but it is still the same logic playing out. To return back into a daily order block, inside of the daily order block, where they refined 4-hour order block here and here. And once we tap it, what are we looking for? A reaction to take us higher. We're looking for what? New 4-hour order blocks. So when price is reacting to the daily order block, most at times it will react to the order block that was already there, the refined 4-hour order block that was already there. Then in other cases, when reacting to it, just like we see here, it tapped it the first time. When it moved, there was no new order block. So we came back, we retraced, we came back down again, and we had our first order block over here, new bullish order block, and then we return to it. So if you are around at 5 p.m., you could have joined this move. See how easy it is to find specific sessions to trade using the 4-hour. And then we expand, create a new order block here, and then we come back into it. Now, so around this point now, the new order blocks being created over here are not inside of the 4-hour and the daily order block. They are starting to move what outside of it. So always be cautious, be aware of other blocks that are embedded inside of your daily order blocks and other blocks that are not embedded. In this case, if we observe the line, so this order block, I think this order block was the last order block that was embedded. So here, this order block was the last order block that was embedded inside of the daily order block. Then over here, this order block was the last one. By the time we got to this other block, it was outside. So be cautious of the fact that some other blocks are embedded while some are not. So we come back and then we react back to this old 4-hour order block, and then we dance a bit, and then we come into another new week. So at the start of this week, as you can see here, this week opened and we traded what into a old 4-hour, a old daily bearish order block. So this is the daily bearish order block that was utilized up here. So we have come back into it at the start of this new week. We opened and went straight into it and we tapped it. Now you can see that this pattern keeps repeating. We tap the daily bearish order block, create a new 4-hour order block, and then we deliver from there. So after trading into it and tapping it, if you check there, you'll find 4-hour order blocks around this region. Same thing here. We created a new 4-hour order block. So at 5 p.m., once again, if you are around, or if you were around, you could have joined the move to take you lower. Then we create a new order block over here and here, but we closed too far, we could not utilize it. Then kept selling lower, created a new bearish order block, we could not come back into it. But I think this guy here, ETH, came back to its own order block. So you see how even doing when the market is already trending, you see how you can still align yourself with moves. Return back into the bearish order block on 4-hour. Now, this order block on the 4-hour time frame, I don't think it was responding to a bearish order block because there's no bearish order block around this region. So this 4-hour order block, I think this should be just a stand-alone order block over here. We react to it, we break down, creating a new order block over here. So I think this is where the month actually closed. Yeah, this was the last week of the month. So after that, there was no other example. So to summarize, the 4-hour time frame acts as a bridge between the daily time frame and the lower time frames. And when we come on the 4-hour time frame, we're not just trading blindly. We already have our levels from the higher time frame, specifically the daily time frame, to work with. So inside of that daily order block that you have, that daily order block that you have got from the daily, inside of it, you can use 4-hour to better refine, to know the specific area where price may retrace to before expanding. That way you can have better entries. And also you can use 4-hour to know what? To know specific sessions to trade, like I've shown you now. When you use the 4-hour to align your trading, you are able to know, is it the 1 a.m. candle, is it the 5 a.m., or is it the 5 p.m., or is it the 9 p.m. candle that will be delivering this move? Because once you have a daily order block, you have a better idea of when the delivery may come. The same way when you have SMT. If you have SMT, you are more likely to know that, okay, this delivery may start now. So apply that same idea with your order blocks. Because this is how the script delivers. The daily creates a order block, then the 4-hour creates an order block aligning with the daily, and then the 4-hour uses that order block to deliver. But if you want to take it a step further, you can break down your 4-hour candle onto your 1-hour time frame. The same way I've broken down your monthly to daily, your daily to 4-hour, I can take this a step further and I can focus on the 4-hour candles or the 4-hour order blocks, and then I look inside of them on the 1-hour time frame. I don't know if I'll be covering that because the video is already quite long, but I think with the information I've shared already, you should be able to better align your trading style. I believe by now you may have noticed that I didn't talk too much about SMTs in this lecture, because I want you to understand that when you trade in the marketplace, you are not just trading SMTs, you are trading a market that has what we call structure. And this structure has already been pre-programmed. Somebody coded this. So the best way to know how to trade the program is to break it down by working backwards and then working forward. Back tests, do your look backs at the end of the month to better align you for start of the new month. I think maybe to even wrap up the video, I will just take a look at a much more recent example. Maybe we can start. Let's start with let me just use this roundup. I had plans to go to the H1 time frame. I even wrote down some points. Maybe I'll just read them out before I wrap up the video. So for the H1 time frame, that order block you see on the H4 time frame is actually a true break of structure on your 1-hour time frame. A true break of structure, like I said, is a break of structure that creates an higher time frame order block. For example, maybe a daily or 4-hour order block. We use the 1-hour time frame to refine inside of our 4-hour order block. The same way we refine our daily order block using 4-hour. We refine our H4 order blocks using our 1-hour time frame. The same way we refine our daily order blocks using our 4-hour time frame. It's the same way we refine our 4-hour order blocks using our H1 time frame. So what does this mean? This simply means that we look for H1 order blocks or 1 hour order blocks embedded inside of 4-hour order blocks. Then we can also take this a step further and push it to 15 minutes. That order block that you see on your H1 time frame is actually a true break of structure on the 15 minutes time frame. Now we can keep going, but I believe you get the logic by now. The 15 minutes creates what you see on the H1 time frame. The H1 time frame creates what you see on the H4 time frame. The H4 time frame creates what you see on the daily time frame. The daily time frame creates what you see on the monthly. But remember, your only focus should be on the order blocks and SMT. So just to round up, let me just use the new months, repeating the same process that we just had. So I think I can let me just clear the charts for this one. Move all the drawings and then let me start. I'm coming 1 second. So we'll go back to the monthly time frame. So we're starting with the month of July this time around. So first thing we do, mark out the opening price. So this time I think you may observe I might be moving a bit faster. That is because I've already outlined what I need to outline, so I don't need to be slow like the first time. I've explained what I need to explain. So at the start of the month, using the monthly time frame, what can we see? We have what? Above July, we have some set of bearish blocks the same way. Above, we have set of bearish blocks over here. Then below, we have a old low that has not been tapped here. We have a old low that has not been tapped here. So let me mark out the set of order blocks. 1 second. So this is the order block I'm referring to. So you can see this is our multiple order blocks. We have singular order blocks and multiple order blocks, or singular candle order block and multiple candles order block. So we have not yet traded to the order block, as you can see. So let me also add this, because remember I told you also take note of the weeks, even though I may not always like the week, but I'm always taking note of the week. So you can see above we have bearish order blocks and below we have old lows. So it's possible that BTC and ETH may be retracing what's higher to go lower. So already you can see how you have formed an idea, even though there's no clear bullish order block. Yes, there are old order blocks here and here, but they're not the best. So even though they're not clean or very clear like order blocks, one thing that is clear, you have order blocks above here, and you have lows here. So, but you have an idea that before price may decide to go lower, it may want to go higher because of the other blocks above. So using this, we can check our monthly. Is there anything to work with? So I think, sorry, not monthly, we can check our weekly. So I think one thing to take note of on the weekly is that the new month was starting with what? A bullish SMT. So if you observe, the new month opened and then we dropped down. And as we're dropping down, observe this low. Please make sure you take note of this low here. Observe how ETH could not go below that low, but BTC traded below that low here and here. So the new month was taking previous week low inside of a pre-existing SMT, and we were not getting that same raid over here. So the new month opened into a bullish SMT. So this further supports the idea that we may need to return back into the bearish block to go lower. So even though we already have like an idea that the month is bearish, but it needs to go up to go down, we're also aware that there's a bullish SMT. So that means the month may not straight away run downwards. It may want to go higher to come down. So you can see the month, the first week of the month played out. We created a bullish order block, and then we ended up using it now in hindsight. But at the start of that month, when the month was beginning, it opened and then it went straight to do a bullish SMT. And we already had our idea for the monthly that it may want to come higher. So you can see how easily you could have started aligning your idea to push higher. But remember, the weekly is just to support our idea. But the weekly is good on weeks like when we have, for example, like last week when we had this bullish order block. It's good. It's something we can work with. And when we also had this SMT at the start of the week, these are the things we can use from the weekly time frame. So now we can go to the daily. Sorry, before we go to the daily, let's mark out the start of the month. I'm moving too quick, sorry. So let me the start of the month, and then Don't know why it's not allowing me to copy, so let me just do it manually. So now we can go to the daily time frame. So on the daily time frame, what can we see? Remember what I told you at the start of the month, you are looking for the first order block that you can find to work with. So at the start of the month, when the month is opening, we have marked out the monthly open. This is the monthly open, by the way. So this is the monthly open. Now, around the monthly open, when the month opened, let me arrange the line a bit. So when the month opened, we went down. So before we go too far, so on the daily time frame, remember the daily, you're just using the daily to see inside of your monthly candle. So around the monthly opening price here, we're looking for ideas to support maybe the return into the monthly bearish order blocks to sell. So as you can see, the first idea we had was this SMT that occurred here. So at the start of the month, we had this SMT here. This was the first SMT to give us the idea that we want to return inside of the range. So after the SMT occurred, you can see at that moment, this guy already had like a bullish order block. These two candles here on ETH, he had a bullish order block. So at the start of the month, ETH was already kind of like in a order block. So as this SMT occurred, then we closed a bit higher. But at least with the SMT, we have indication or idea that we want to return back into the range before selling. And based on the other blocks that we have from the monthly time frame, you can see how that buy idea kind of makes sense at the start of the month before maybe the sell will now play out. So on Thursday of the first week of the month of July, you can see we closed above this candle here after the SMT, creating our first bullish order block, but we closed quite far away from the other blocks on both of them. We closed quite far away, so the both of them did not get a chance to return back into their other blocks. So although we had an idea, yes, that BTC and ETH may want to buy at the start of July back into their monthly bearish order blocks to sell, we did not actually get the return to the other block here that we would have loved to see on this day before the continuation higher. Price just kept pushing and pushing, and then we started stalling at this premium over here. So, but if you check closely, you can see we returned back after buying. We bought into the range, came back into some old set of bearish order blocks. We rejected from them, created a new bearish order block, and then whatnot. So we do the same thing just again like we've done with the month of June. First and foremost, we mark out the other blocks. So let me just quickly mark out the other blocks. I will not waste too much time this time around. Remember, you mark out the body, but pay close attention to the wick. So if we are buying from down, remember we're going to be targeting old bearish order blocks and old highs. So this was a good target, this bearish order block here. Likewise here on the old high. So we bought, and then we ended up getting the bearish SMT, and then we get a bearish order block also. So let's mark out this bearish order block over here. Sorry, let me just arrange this better. Okay, there we go. So you can see how this other block has a long wick. So I have to take note of the wick just to remind myself that we are still trading inside of the other block. So the wick is quite long in this case. Let me just mark it out. Then the same thing here. But I think based on the fact this one is actually reacting to inside of the other block, it's touched it. So let me just leave the box. Then we tried selling lower. We bought. And then we created something. We bought and then we created something that looked like a bullish order block over here. You can see this is a bullish order block. Well, let's call it a bullish order block. So created like a bullish order block here, and then likewise here too. And now we're dropping back into it. So this is where price is currently. Now you can see how even on the daily, especially from when this buy occurred, just like with the massive sell we had at the start of the month of June, there's not much to do on the daily. There's not much to do. So this is why I'm even showing you this, because I want us to see how the same ideas I just shared with us can still be utilized with our current market structure. So let's come back to the start of the month. There's something I failed to highlight, so let me just highlight it. I didn't highlight the days or the specific days that we would have expected to get our entry, so that should have been here and over here too. And then for the sell entries here, oh sorry, wrong pointer, that should have been here, and then over here. So for this new bullish order block, I think this would have been the best opportunity. Sorry, the first return, not the best opportunity, would have been the first return. But one thing we have to take note of, I think I should just add this. First, there was the SMC here after we bought some that low. This was the first target if we had been in the buy, by the way. So, and then after that, we had a second SMC just yesterday. Okay, sorry, today to be exact. Yeah, the second SMC here. So you can see how this SMC now leading us back into this order block. I wouldn't advise you. That's why I even wanted to add this now, because it just came to my mind and I thought of adding it into the picture, because when you see cases like this, it's kind of like makes you question, will this order block hold? Because ideally you want to see price open, come back into the order block first before buying. But instead we went up first, so we bought into this high, created a bearish SMC, and now we're selling back into the order block, which is much more dangerous. So now that I've highlighted the opportunities using the daily time frame, let's go down to the 4-hour time frame. So on the 4-hour time frame, let's come back to the start of the month, which is over here, down here. So when the month started, we had the SMT, which I was just talking about at the start of the month, which kind of like gave us a confirmation that I want to push higher. Although we have not yet reached the monthly levels which I had marked out, but we got quite close. So anyways, starting from down here, you can see there are 4 hours opportunities being presented. But at this point, I think this should be the day that's confirmed the order block. At this point, when these order blocks are being created, these order blocks are just like I told you, your 4-hour break of structure will create your daily order block. So you can see how clearly this is a 4-hour break of structure. This is a 4-hour break of structure, and it's also the daily order block. So ideally on Friday, we would have expected a return back here or around this region before buying, but we didn't get that. So how could you still have joined the move? Now remember what I said, your 4-hour in a way kind of like helps you position yourself for the major directional trend intra-week. So you can see how, although we did not trade all the way back to the order block on the daily time frame, you can see how on BTC up here, we create a new bullish order block on the 4-hour at 5 a.m. So by 9 a.m., which is London, you could have easily joined the buy move using this 4-hour candle over here, the 4-hour order block. Then we kept buying, created a new order block here, and then returned to it and then kept buying. So I think let me just mark this out. Let me mark this 4-hour order block. So maybe I can use it to briefly just touch on 1 hour before I close this video. So 4-hour order block, then we created a new 4-hour order block over here. also have one here. So you can see even by 9 p.m. using this 4-hour block, you could have positioned yourself here. Then we come back, we still tap it again around, this was around 5 a.m. Could have still used here to join, create a new bullish order block. We buy, we come back into it. And then by this point here, you can see we have already hit those highs on ETH on the daily time frame. So there was a bearish SMT here. So you can see why price begins to act funny, preparing for a sell-off. Starts acting funny, consolidating, because it has already hit a daily target. And then around here we had a bit of consolidation, tried to buy, created a bearish order block. So let me just zoom in here. You can see how even using 4 hour, you can see how there are small pockets of opportunities every now and then. So you can see how on this day over here, I think, is that an SMT? No. After attacking those highs, we create a 4 hour order block over here on ETH, and by 5 a.m. so easily by 5 a.m. you could have used that 4 hour block to maybe catch a little trade intraday. Then we come down, read some lows, create a new bullish order block, and then we bought higher, rejecting those highs. We come back into the 4 hour bullish order block. We tried to buy, we couldn't buy, we failed. So this is around where the daily bearish order block was created, with the one with the long wick. So you can see how on this day, this is what I would have expected on this day, on Friday here. Sorry, I don't know what's going, sorry. This is what I would have expected on this day here. Let me zoom out. I would have expected this day to retrace to the daily order block, possibly an area where there's an embedded 4 hour order block, and then reacted from there and continued buying. So if you check here, so this is what I would have expected from that Friday with the bullish example. See how the next day, what happened, we opened. So this is an example of a pre-existing order block already existing after the order block has been created. So the order block was created when we closed on Tuesday. After this Tuesday closure of this 4 hour candle, the daily order block was confirmed, but also we confirmed what a 4 hour order block. So very easily by 1 a.m. you can see how easily you could have joined or could have been a part of this move using the 4 hour candle embedded inside of the daily order block. And from there we have a nice sell-off. So after the sell-off, created a bearish order block here and here. So by 1 p.m. once again you could have joined the move. Nice sell-off. Then after hitting this low, I think there should be a SMT there. So you can see if you are joined the move from here or around here, after hitting these lows, you could have gotten out because of the SMT. Then after the SMT, you can expect what maybe bullish price action to come back into the market. And as you can see, it creates a new bullish order block. So I think this is where I tried buying. I tried buying over here, but then I was stopped out because ETH did like I think 3 different rates on that day. Then it stopped me out and then it ran away. So but you can see how nicely bullish order block here, bullish order block here, we return into it. Then we end up buying higher. So as you watch closely, you see how bullish order blocks play their role during this period of buy. Over here you can see how the bearish order block played their role during the period of sell. Likewise over here you can see how the bullish order block played their role during the period of buy. So using the 4 hour and combining it to the daily, you reduce your strike rates because you end up focusing on more precision strikes. You are not just trading blindly, you are trading cautiously. So coming into today's price action, what do we have here? Sorry, excuse me. So on the 4 hour you can see, although there's no daily order block up here, on the 4 hour can we see what can we work with? We have the 1 a.m. candle of today opening up and creating what? A bearish SMT. He attacked these highs, but BTC could not attack those same highs. BTC actually was trading into this set of order blocks and then it rejected. traded into some 4-hour order blocks and then rejected, but at the same time ETH was reading these highs, and after reading those highs it broke down straight towards the order block. So you can see how today there's not much order blocks, but inside of that daily order block that I marked out, if we refine now, what can we see? Inside of the order block we have this 4-hour order block and we also have this. So currently we have traded to this 4-hour order block. So if price wanted to take a break, if this range was maybe a valid range for it to continue buying, then you would expect it maybe somewhere around this region because of the daily order block being combined with the 4-hour order block. But this sell here was a very good sell. I want to just make note of that before I continue. Even if it's just 1 hour candle, sorry, 1 4-hour candle, this candle is open inside of this bearish order block after the sell that we have been seeing. This is rejecting from the FVG over here, and then it closed just like the other time frame example, whereas this is kind of like having a order block and then after the order block gets permitted, by 5 p.m. we open straight to the order block, sell off, open, sell off. But for me, I wouldn't have taken this sell over here because of the discount criteria. I would have rather preferred, if I wanted to have traded the sell, I would have rather preferred to trade from the SMT or somewhere around there. But currently where we are, we need to be careful because we're inside of a daily order block and we are also trading around a refined area on the 4-hour. We have a refined 4-hour order block here. Over here we have a refined 4-hour order block, but it's a bit lower. I've not gotten down there, but we have tapped the daily order block and I've also reacted to this 4-hour FVG, but the 4-hour refined order block is a bit lower, so I've not gotten down there. So for all we know, they might decide to still sell lower, maybe do SMT, or they may catch a breather here because I think we're very quite close to the closing price of the day. So just before I round up, as you can see, basically similar thing, just that this month so far we have not had many other blocks yet. We've not had many other blocks. We only had a few. We only had 1, 2 and 3. Those are just the other blocks we've had so far. So let's see how the month plays out going forward. Then before rounding up, let's just go to 1 hour quickly. Let's look at some of those 4 other blocks which are marked out. You can see how it's just the same thing repeating over and over again. These areas over here, these are 4-hour order blocks, 4-hour bullish order blocks. Now you can see how when the 4-hour candle returns back inside at when this should be doing London. Let me just before we continue, let me just come back to this 4-hour and just do this quickly. So inside of that 4-hour candle, let me mark the specific entry candle so we don't get mixed up. So this should be it. That is 9 a.m. Then this should be, this is also 9 a.m. Okay, 5 a.m. Then this should be it here. So on the 1 hour time frame, let's look at those same levels. So you can see how the same thing that happens with your daily and 4-hour, that same relationship, it can also be applied to your 4-hour and your 1 hour. Now observe, at 9 a.m. we drop what into the 4-hour order block, and we're also trading where at a H1 embedded order block. Why is it a H1 embedded order block? It is a 1-hour order block inside of a 4-hour order block. We drop into the refined 1-hour order block, and then after dropping there, we start buying off. But the same way when your 4-hour reacts to your daily order block and creates a new 4-hour order block, the same way when your 1-hour reacts to your 4-hour order block, you anticipate to possibly see a new 1-hour order block being created. Then we buy a bit, we create a new 4-hour order block, same thing, we return back into it. But are we just returning to the 4-hour order block? No. Observe here, the 1-hour order block embedded inside of the 4-hour order block. We trade inside of the week or so over here, and then we continue buying. Likewise, with this example here, 4-hour order block around this region, we trade back into it, and we have this multiple candle order block on the 1 hour. So this is your refined 1-hour order block embedded inside of your 4-hour order block. we trade back to the 4 order block and also the refined H1 embedded order block. Then we had a nice buy. So you can see how these ideas, these concepts, they work hand in hand and they are applicable to all time frames. Your own job is just to know how to align these time frames. Although it is applicable to all time frames, there is a alignment that needs to occur. If not aligned correctly, you end up trading random H4 and H1 order blocks. But when aligned correctly, you end up trading in line with the daily trend, the weekly, and the monthly. And you end up catching big, massive expansions. So going forward, just try as much as you can to align your daily and your 4 hour. But if you want to take it a step further, you can align it with your 1 hour. Now let me just add this at the end of this video. When dealing with 1 hour SMTs, just think about it like this. Your 1 hour rates are more likely to occur inside of a 4 hour order block. Your 4 hour rates are more likely to occur inside of a daily order block. Your daily rates are more likely to occur inside of a monthly order block. That is just how the script works. That's why when you align your daily and your 4 hour correctly, you end up with something that is almost like magic. It seems like you are predicting the specific reversal point or the most precise reversal point. It almost feels like magic. Why? Because you are working in line with the script, and the script has already been programmed that when daily aligns, 4 hour also aligns. So your job is to use the information on your 4 hour to align your 1 hour or any other time frame below it. So I believe with this, I can put an end to this video. Good luck, good trading. Well, I don't know when next I'll be active making videos again, but see you in the next video. Take care. So we have reached the section where I give some examples. For these examples, I'll be using familiar price action that I was involved in personally, so that the video will not be too long. So let's start over here. I want to give this sell example. I'm choosing this sell example because this one has like a 1 hour SMT. So there's this bearish order block on BTC over here on the daily. Remember, I marked the body with the box, but I'm also conscious of what the wick. So that's the wick over there. So this is the daily bearish order block. Now, during this period, ETH did not have a bearish order block. I'm using more examples, some more advanced examples in these explanations, because I want you to notice that it is not every time that these two assets will have a order block at the same time. Normally, when they both have order blocks, I call this true alignments. That means both assets are truly aligned. So at this point in time, when BTC had the order block, ETH did not have a order block on that day, but we can expect that the momentum from BTC will cause ETH to push lower as well on that same day. So I'm going to be going to the 4 hour time frame so that we can have a closer look at what happened on this day over here. So let me just drop a line on that day. 1 second. So this is the day of focus. This would have been our day of operation or our day of hunting, because we have a order block on BTC, but we do not have one on ETH, but we can use the order block on BTC to frame a trade idea. So going to the 4 hour time frame, we look around the region. Now remember, only BTC has an order block here, so I'm more focused on BTC. I am not paying too much attention to ETH, but I am conscious of ETH's structure coming into this day. What day was it? Was it Wednesday 17th of June. So on Wednesday 17th of June, what are we supposed to do when we come to the marketplace? First and foremost, we mark out the opening price. Sorry, I don't know why that line keeps moving. So we mark out the opening price for that day. So let's mark out the daily opening price. Sometimes I use the 1 a.m., but ideally our mentor taught us to use 5 a.m. opening price. So let's use the 5 a.m. opening price on this day as our 2-day open. Also here, 5 a.m. So this is our daily open. Our daily open for the Wednesday where we are supposed to trade. So after the close on Tuesday, BTC permitted a bearish order block on the daily. ETH did not, but we are expecting that if we get the SMT inside of BTC's order block, it should cause both BTC and ETH to move lower. So we have a sell idea. We are framing a sell idea here. Now, if you observe, remember what I thought. 4-hour true break of structures are daily what? Order blocks. So the daily bearish order block is actually a what? A 4-hour true break of structure. You can see that there's a break of structure here on the 4-hour around the region where the daily order block was formed. So now, why are we on the 4-hour? The 4-hour is for two things. Number one, to refine the daily order block, and then number two, to know the specific session of focus. So in this case, there was a SMT on this Wednesday above the 2-day open. So this is like a perfect scenario. This is what I call ideal. These are the kind of things we look for in the marketplace. Ideal scenario. This is an ideal scenario playing out here. So inside of this daily order block, we refine and we look for a 4-hour embedded order block inside of BTC's daily order block range. So let me zoom in so we can focus here. So this is inside of the order block. So if we look over here on this day when we open, we look back. Once we have highlighted the daily open, we look up. Remember, once you have your opening price, just like we did with the monthly, you look above and below. So since we are bearish due to the daily bearish order block, above we are looking for what? 4-hour order blocks to refine the daily order block. So we can use this area here. We can use this double candle order block over here, or if you want to use the singular one, you can decide to, but it's not bad. Since we're focusing on the body, you can just use the both of them. So let me just make this a different color. So let me 1 second. I don't know what's wrong with this. Okay, so refining that inside of our daily order block, now we have an area of focus. So even before this SMT, because there was a SMT over here, even before the SMT occurred, we could have marked down this 4-hour order block inside of our daily order block, expecting a return around this region to push us lower. And if you observe, when we opened that day, we did not go there up until when? 5 p.m. in the evening. So by 5 p.m., the 5 p.m. 4-hour candle, remember 159 logic. So by 5 p.m., what can we see? We see BTC open, the 5 p.m. candle on BTC, sorry, the 5 p.m. candle on BTC opens, it trades higher into the daily order block and into the refined 4-hour embedded order block. Why do we call it a embedded order? Why do we call it a embedded order block? It is because it is inside of the daily order block. So we open, trade into the daily order block and also into the refined area, and then we reject. So now remember what I said, the 4-hour allows you to refine the daily order block and also find a specific session of focus. So automatically, if you are aware of your 4-hour time frame and these structures and also these openings, because over here we actually have a 4-hour opening price. If we want to be more precise, let me just add this in over here. So we have a 4-hour opening price over here. So let me make this like a different color. So we have a 4-hour opening price over here. So now if we go to 1 hour, this is where we'll be concluding. If we go to 1 hour, before going to 1 hour, let's also look at ETH structure. So remember, my focus is more on BTC because it has the daily order block, but if we also pay attention to what ETH did on that day, ETH opened, then what happened? We traded lower, and then we permitted a 4-hour bearish order block over here. So if we extend this order block on the 4-hour forward over here, you can see that we return to it by 5 p.m. So let's also mark out the 5 p.m. open over here. So by the time we go to 1 hour, we don't lose track of these levels. So I don't think that is the same color. So yeah, let's now drop down to 1 hour. So now you see how when you have a better understanding, just like I've created now, by the time I'm seeing a 1 hour SMT like we usually see, we're not just seeing a 1 hour SMT anymore. Let me find that. Sorry. We're not seeing a 1 hour SMT anymore. We're seeing a 1 hour SMT, or in this case, a 1 hour bearish SMT inside of a daily order block at a refined 4-hour order block, which is inside of the daily order block. So on the 1 hour, when the SMT is occurring at 5 p.m. Now remember, this is the 5 p.m. open, so let's just add more information here. So let's also do the same here. Let's extend this a bit forward. So this is actually the H4 minus bearish order block. Then over here, this is actually the opening, 5 p.m. open. So you can see by 5 p.m. it makes a lot more sense on the 1 hour now. What is happening on the 5 p.m.? The 5 p.m. candle is actually opening. The 5 p.m. 4-hour candle is actually opening and doing what? It opens, it trades higher, and we get our what we already know, our 1 hour bearish SMT. Now this is a weak rejection SMT if we want to be more precise. Let's make it clearer now. So our 1 hour bearish SMT, weak rejection SMT over here by 5 p.m. Then we get a 1 hour bearish order block, and this is also a bearish order block inside of a weak rejection. So this is a double, kind of like I call it double SMT, in the sense that we have a weak rejection and also have a bearish order block together, because usually you don't get these kind of things when you get weak rejections. You usually get a fast delivery and you might not get a return to the order block, but in this case the order block forms inside of the wick. It does not close above it, it forms inside of it. So this is our normal 1 hour bearish SMT that we usually trade. Nothing new, but I just wanted to add the bigger picture in more detail, because when I taught you SMTs, I only focused on the SMTs and did not bring the structures or the structure into the picture. But you can see how easily, even on the 1 hour, we have a bearish break of structure, come up with break structure again. This is even a better break because we close with a body below the low over here. And then we return into that range from that high to that low. We have a bearish SMT inside of a daily bearish order block and a 4-hour refined order block inside of the daily bearish order block. Then by 5 p.m. we see the return back into the order block, the daily order block and the refined 4-hour order block. And also on ETH, you see ETH returning into its order block that it's confirmed intraday as a return to the 4-hour order block. At that time, what is BTC doing is trading inside of the daily order block and at that refined 4-hour order block level, and then we rejected. So you see how using 4-hour you can even refine your stop loss. Your stop loss can easily be just above the bearish order block on 4-hour if you want to put it there, or maybe you want to put it at the body because this is the body that I marked out, so you can put it just above the body if you want to be more refined. The same thing you can do here. You can put your stop loss just above the body of the other block on the 4-hour, and you can hold the trade. So this is the first example. So you see how easily you can arrive at what the 5 p.m. 4-hour candle as your point of focus, combining these things. So I believe with this example you have a much better understanding of how to apply these ideas that I've just introduced to you in regards to the 4-hour and the daily time frame. So let me bring up Nasdaq and US 500 for the second example. So in this example, I'll be using Nasdaq and US 500, or US 500 and US 100. Now, this example does not necessarily involve a daily order block, but it is more of how you can align yourself using the 4-hour intraday. Before going too far, I want to just explain something important. I think I highlighted this in the video. When trading pairs like Nasdaq and maybe DXY, EUR, GBP, these pairs tend to have strange 4-hour timings, or strange 4-hour opening times rather. So when I work with these pairs, what do? I just use the 1-hour intraday to get my 4-hour order blocks, or to keep an idea of what is happening on the 4-hour. So if we take a look over here, what's happening, let's look at yesterday's price action. So for yesterday's price action to make sense, I think we need to start from Friday. So let me just quickly highlight 159 for those days, so that we can have a clearer picture of the opening and closes of those days. So let me make this easy for myself by turning on the pencil tool. So 1, 5, 9, 1, 5, 9. Then we do the same again for Monday. 1, 5, 9. Then for the afternoon, 1, 5, 9. Then, well, I don't know if anything's happening today, but let me just extend it to today. 1, 5, I think I've gone too far, sorry. 9. Then 1, 5. Oh, I made a mistake there. But so you see how for today's price action, I'm marking out the 4-hour openings for candles that have not opened. So you can just do this intraday. You don't need to wait until it's 4-hour or when that candle is opening before you mark it out. So now, keeping this in mind, coming into Monday, what do we have here? So already on Monday, I noticed that there was a 4-hour order block over here. So I'm going to use this 4-hour just to open up your mind a bit. Or I'm going to use, Nasdaq and US 500 to open up your mind a bit to how you can use the 4-hour, how you can use the 1-hour time frame to keep track of the 4-hour. So if you observe the 5 p.m. open on Friday evening, we opened here and we closed around here. And if you consider usually 9 p.m. Or the last candle of the day for the last hours, I made a mistake here. It should be over here. So the last candle of the day, I think around like 9 p.m. the last 4-hour candle, it doesn't usually do much, so I don't usually consider the 9 p.m. candle as anything to work with. But anyways, so from the 5 to around, let's say 9, we close higher. Then when we open the next day, if you observe, see where the this is where the 1 a.m. 4-hour candle opened. So that means definitely the candle before this closed below the 5 p.m. 4-hour candles opening price. So that means over here there's what, a 4-hour bearish order block in a way. Let me just highlight this for you so you can understand better. Around here, I will extend this around there. Yeah, so even though I'm not on the 4-hour, I'm aware that this 4-hour candle closed higher, then the next 4-hour candle closed below its opening price. So that means definitely there is a 4-hour bearish order block over here. And you can see how on the 1 hour by the 1 a.m. candle trades into it. So this is what I mean, like you can use these 4-hour opening times and the 4-hour order blocks to align yourself for sessions, or to align yourself to better know which session to trade. So somebody that is awake by 1 a.m. could have easily tried to use this 4-hour order block for a sell-off. And you can see how that played out. So if we check over here too, the 5 p.m. candle closed higher. So when did we actually close out below the opening price? We closed below the opening price of this candle. Let me extend this all the way here, so you can see how it was still reused later on. So we closed below the opening price. The 1 a.m. candle opens here. It opens around here, so we had not closed below the opening price. So it was this. This was 1 to 5 a.m. So 1 a.m. to 5 a.m. When the 5 a.m. candle is closing down here, around here, you can see we are closing below this 5 p.m. 4-hour candles opening price. So by the time we are closing around here for the 1 a.m. 4-hour candle, we are also closing below the 5 p.m. 4-hour candle from the previous day's opening price. So we have confirmed the bearish order block somewhere around here. I just hope I'm not losing you. I'm trying to go slow, but I believe if you rewatch and rewatch, you'll be able to understand better. So we have confirmed the 4-hour order block. Then what happened? We traded back into it, and then we came down, and because yesterday was quite a tricky day, because there was like a bullish order block on the daily, I believe. Let me just go back to the daily, so before I continue. So yeah, yesterday was a bullish order block on the daily on both US 500 over here. Let me just turn up this joint so we can see clear. There was a bullish order block over here on the daily, and there was also kind of like a bullish order block over here, a big one. So yesterday, in a way, it's easy to see how you could have been anticipating buys based on what you can see on the daily, and I think also on the weekly. There should be a weekly, and you can see over here we have a weekly bullish order block. So this is why I'm making this particular video, because I want to just open up your mind in a way to kind of see how it is possible to maybe still realign yourself with the trend for that day if you keep track of your 4-hour candles. So yesterday, this drop down, like the first sell-off was good because we need to sell into the bullish order block on the daily. So when we sell lower like this, we are going into the bullish order block. Then we had the bullish SMT for yesterday around this SMT occurred around the 5 a.m. 4-hour candle did this SMT. So when this SMT occurred, we had a buy back into the range. So as we're buying back into the range yesterday, if you observe, where is this guy going? He's going back into that 4-hour order block. And we need to see more signs like confirmation that he wants to push higher. And then later on, what happens? We have a 1-hour bearish SMT. We have a 1-hour bearish SMT where inside of that 4-hour order block. So we have already seen a bullish SMT down here, but we have gone far away from there. We're at a premium and inside of a 4-hour order block, and we have a 4-hour bearish SMT, and then we start selling off. So maybe around here you may still be skeptical, which is okay, because even I was skeptical. But by the time we are coming into this 5 p.m. candle, because this is the candle of interest, this is where I want to draw our attention to for yesterday's delivery. So by the time we are coming into this 4-hour candle by 5 p.m., we have already done a few things, so let's focus on this section around here. Let me make this a bit bolder. So if you observe, we have this was 5 a.m. candles opening, then we have what over here, we have 9 a.m. So the 9 a.m. candle opens here, and then it closes where this one opens, so it's closed a bit higher. It's not clear here, but if you consider the opening price and then where this candle opened and then closed, the closing price around here, you can see we are still closing higher above the opening price of this 4-hour candle by 9 a.m. So this is a bullish 4-hour candle. So by the time the 1 p.m. 4-hour candle closes, you can see it's closing lower, both below the 9 a.m. 4-hour candle and also the 5 a.m. 4-hour candles. You can see how we closed. Oh, sorry, my bad. We didn't actually close up below the 5 a.m. because this is where it's closed around there. So, but we're closing below the 9 a.m. So this is a 4-hour candle over here. Let me just mark that out. So there's a 4-hour bearish order block around here. So also we can also see that there's a 4-hour bearish order block over here too. So we have a 4-hour bearish order block that was confirmed when we closed over here. So you can see how when we are opening at 5 p.m. the 5 p.m. is not just opening and trading higher, it is opening and trading back into this 1-hour bearish order block. There's also a 4-hour bearish order block around this region. So in a way, this is a 1-hour order block embedded inside of a 4-hour order block. So you can see how the same logic I taught you with the daily and the 4-hour also applies here. The same thing here. This is even better because this is also returning back into the 4-hour bearish order block and also the 1-hour double candle bearish order block, which is embedded inside of the 4-hour order block. So you can see how the 5 p.m. candle is a bit more clearer. So we may not have been sure around here. We may be sure, yes, they needed to sell back into the bullish order block on the daily. But around here, when all of this is happening, you may be a bit confused. Are we just coming back down? Because there was the SMT again. When we came down, we attacked these lows over here on NASDAQ. So there was SMT making us feel as if we wanted to go higher. But if you observe, after the SMT, that is when the 4-hour order block was confirmed. The 1-hour order block was also confirmed. So all of this happened after the SMT. So in a way, it's like the SMT did its thing, tried to push higher, but it couldn't, and then was exhausted, and it came down lower. So let's look at the entry by 5 p.m. on the 15 minutes time frame before I wrap up the video. So this is the area. This is 5 p.m. So you see how on 5 p.m. by 5 p.m. this is the 5 p.m. candle, the first candle by 5 p.m. we open, and what did we do? We trade into this 15 minutes bearish order block. So you see how you could have refined your order block, sorry, your stop loss to the 15 minutes bearish order block over here, and then you could have just held for a push lower. So yeah, I believe that is all that I need to cover concerning this trade. So yeah, I believe with this information you should be able to find, well, there will still be losses, you cannot run from the losses, but you'll be able to better align yourself intraday. I think before I round up, let's just see what is happening today. Let me go back to the 1-hour time frame. So on the 1-hour time frame, what can we see? So after yesterday's sell-off, is there maybe like any bullish SMT? I think for today, to be clear, I need to go back to the daily time frame and mark out the daily order block so that we can have a clear picture of what is happening on the daily also. So let me zoom in. Excuse my lines. I would have turned them off, but by the time I start drawing, it will appear again. So let me just quickly mark out your order block and then also the week. This is the week. Let's make that green. Then let's do the same here too. This order block is quite big. This was a bit bigger, so let's just mark it out. There's the body. So now if we go back to 1 hour now, so what is happening today? Let's see. So on the 1 hour time frame, what can we see? So we're back at the discount of this big range. If you observe, so this is the daily order block range. And if you remember what I've covered now, on the daily order block range, or inside of the daily order block range, we look for 4 hour order blocks. I can recall that there's a 4 hour order block around this region, although I have not marked it out. I don't want to make this video too long, but where we are right now, let's just say we are trading inside of we reacted when we came down, we reacted to a 4 hour bullish order block inside of a daily bullish order block. Likewise, over here too, we retraced into the discount and we reacted inside of that daily bullish order block. We also reacted to a 4 hour bullish order block. So we have reacted from a deep discount and we have started pushing higher. And on the 1 hour time frame, if you pay attention, you can see that this is actually like a 1 hour break of structure, which is very good to see because it indicates that possibly price has shifted bullishly. So let me just come in closer so we can get a view of what is happening on the 4 hour time frame. So intraday today, what can we see? Are there any 4 hour order blocks? Because I want you to be able to identify 4 hour order blocks from the 1 hour time frame, not needing the 4 hour time frame necessarily. So if we look back, this this is 1 a.m. This 1 a.m. candle, it opened around here, and then where did it close? It's closed where this one opened. So it's still closed kind of like above the opening price. It's closed above the opening price. What about here? So the 1 a.m. candle opened around here and it's closed here. So we have a down close 4 hour candle for US 500 over here. But for US 100, it just closed above the opening price a bit. Then I think over here, well, if we consider from the previous day, we have another opening price by 5 p.m. So, but we have not yet closed above it yet. Let's see the 9 p.m. opening price. So 9 p.m. open, then 1 a.m. closed. So okay. So we also have a down close candle here. So we have a down close 4 hour candle from 9 p.m. to 1 a.m. 9 to 1 a.m. we have a down close candle, although we did not have a down close candle by 1 a.m. to 5 a.m. But on US 500, we actually have a down close candle by 1 a.m. up until 5 a.m. So now what happened? From there, we opened here and then we closed around here. So when we close around there. So we're basically closing above the opening price of this 4 hour candle over here. So we sorry, I was distracted a bit. So back to what I was saying. So the 1 a.m. 4 hour candle on US 500, it's opened over here and then closed over here. So we have a down close candle, and then at this point where the 5 a.m. candle is closing over here by 9 a.m., it is actually closing above the 4 hour candle from 1 a.m. up until 5 a.m. So it closes above it. So what does that mean? That means the 9 a.m. candle opened, and when it's trading lower, it's trading back into a 4-hour candle around this region. So around here currently, although it's not very clear, there's a 4-hour candle right here in this region, and we are currently trading at the refined 1-hour order block inside of that 4-hour candle right here. That is what we reacted to, the body. 1 second. Then over here, have we gotten order block here? I think so. With the close over here, we closed above. We are not going to consider this 1 a.m. candle because the opening price and the closing price, if you compare them, the closing price is just a bit above the opening price. So that means this candle closed a bit bullishly. But if we consider the 9 p.m. candle from the previous day, which opened around here and then it's closed around here, so it's closed a bit lower, so there's like kind of like a smaller order block around this region. But you can see where we're trading very high now. We have not even come back around here, so I don't think the order block is very much relevant. But if we do close above this 5 p.m. candle, if we close above it, going into the next 4-hour candle, which is around 1 p.m., then possibly we are going to confirm a new bigger bullish order block on the 4-hour, and maybe price may decide to use that one instead, because this area is, I don't know what it's doing here, but it's doing a bit of balancing. So also we can see that there's like an SMT occurring here, sorry, a SMT occurring here. We are going below these lows over here, going below these lows over here, and they are reacting at this 1-hour bullish order block. So possibly maybe this is the buy scenario forming or coming together. So we see how that plays out by 1 p.m. So we have CPI today, so we don't really know what's to come, and the way we are dancing around on the daily is a bit crazy. So maybe CPI can just come and just crash lower, so we don't really know. But based on what we have currently, that is the picture that is in play. But if the picture changes again, then we'll have more information maybe after CPI comes out. So good luck, good trading.